now there's reason to believe that this kind of quote unquote soft landing is possible. But the Magnificent Seven has rallied, and we're not going to see too much more out of that because that's well played. But you're right, there is money on the sidelines, and if we get that cut in interest rates, right? So let's say the Fed's, right now they're talking about May of 2024, right? You might see a quarter point cut, and let's say we get a whole point over time, over 12, 18 months from there. Mm-hmm. You're going to start seeing people with these cash reserves on the side getting 5% interest. All of a sudden, it's down to 4, it's down to 3, 2.25. And then guess what's going to happen?
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. And hey, we got some real interesting numbers out today, and we're going to find out about interest rates, all of this right now. James Locke, Locke.com is with us. James, great to have you back. Oh, and by the way, if you got a question for me or James, shoot me an email, kl@kerrylutz.com. So, James, when we last spoke, hey, things have changed a bit now. Interest rates, debt, all these interesting things. What's going on here?
Yeah, for sure. We've come off of a good November, is the bottom line, right? And, the question is why. So kind of today, what's happening, we know we had as you mentioned off there, a snoozer of a number with the producer price index, but it is an important number. It came in unchanged for November. And that indicates the changes in prices that sellers receive for thousands of different items, services, things like that. And its main use is to tell investors, business, ultimately policymakers, which is going to happen later today, about the direction of inflation. And really, inflation is remaining steady. That's what an unchanged number is telling us, and reinforces that the Fed Reserve is going to leave the Fed funds rate later on today, 2:30, whenever they release that. They're going to leave it alone. I'd be surprised if there's any thing. It's really in the Fed funds meeting this afternoon is really going to be all about Powell's comments, right? Which way is he leaning? And, when we talk about November, coming out of November started off poorly, high interest rates, and there was, kind of taking risk off the table kind of idea. But then 2 weeks in, CPI report, nominal core inflation, pulling back more than expected, softening retail numbers. And what did it do? Send interest rates down, right? And interest rates go down, and every person on Wall Street starts saying, okay, here we go, buy, right?
Rah. Yeah, well, where else are you going to put your money? Let's face it. And there's a lot of liquidity still sitting on the sidelines from all the money they printed over the past 5 or 6 years, right?
Really interesting.
3 years.
Because the last few times I've been on, I was a little bearish and saying, hey, I don't know that the markets are going to end. They're going to end further down, closer to the bottom than the top. But now there's reason to believe that this kind of quote unquote soft landing is possible. But the Magnificent Seven has rallied, and we're not going to see too much more out of that because that's well played. But you're right, there is money on the sidelines, and if we get that cut in interest rates, right? So let's say the Fed's, right now they're talking about May of 2024, right? You might see a quarter point cut, and let's say we get a whole point over time, over 12, 18 months from there. Mm-hmm. You're going to start seeing people with these cash reserves on the side getting 5% interest. All of a sudden, it's down to 4, it's down to 3, 2.25. And then guess what's going to happen? they're gonna start running it up the risk curve, and that's going to put it into investments, which may, from where I'm looking, kind of support some of the more value focused investments, your higher dividend stocks, things like that. It's going to be hard to push everything into the Microsoft, Tesla's, Nvidia's, the AI world with things that high already. Right? Those have kind of been factored in. So you're 100% right. There's money on the sidelines that's gonna push in, and that's gonna keep pressure on inflation. Is the bottom line.
For sure. So the money's there. What other numbers we got coming up here? Obviously, the Fed meeting here is going to kind of be a yawner as well, right? I mean,
yeah, the numbers, they're going to leave the Fed fund rate unchanged, and they're going to state all these numbers, the beige book and inflation measure, CPI, PPI, jobs data. They're going to talk about all these things that are slowing down, and that's why they're going to wait and see how the rate hikes have continued to affect the market. And you're even hearing some of the more bearish people that what's his name, Kashkari, right? He's even starting to soften about further rate hikes. And so it's kind of led to a resurgence in the Fed pivot believers, right? That's what I said, that they're talking about next spring now about starting to cut rates. So we really want to listen to the language that Powell comes out with, right? Because that's going to make a difference and really tell if, you got, just like everything in finance, right? You got, I think it's JP Morgan coming out saying next year is going to be, not so good. And Goldman Sachs coming out and telling you everything's going to be great next year.
Right. But who do you believe?
What's going to be right? Right. And the thing is, as crazy as it sounds, the slowdown in the economy is a good thing, right? Because inflation was causing a lot of problems. But, when you print all that money, like you said, and you put it all these in the hands, like it's like the fireman starting a fire. You know what I mean? Like the government has the ability to unwind it. Question is, will they? And, a lot of it has to do with who's in the White House and who's in the Senate. But you're going to be hard pressed to see the White House unwind expensive social programs. So what are we going to see? We're going to see businesses get taxed. That's coming, right? The unwinding of the tax code in 2025, because money has to come from somewhere to kind of maintain these social programs. And right or wrong, more than that too, maintaining our kind of international allies. Like, unless there's some sort of change in Russia or China, as much as we want to be isolationist, those places and their international moves affect us, affect our life and our economy. So, there's still a lot of spending that needs to be done to kind of keep that international balance, so it doesn't, tip our kind of economic scales here back at home. And so,
right,
how are we going to come up with that money? Well, it's coming out of the taxpayer, and this is what people that come into my office are always shocked to learn that they're the wealthy, and they look around and they're struggling to meet their mortgage payment and provide a better life for their kids, and all of a sudden they're like, well, what do you mean I'm the wealthy? And I'm like, well, go talk to DC and they'll tell you have more money and they want a piece of it. And that's what's going to happen. We're going to see taxes go up. We're going to see businesses get taxed to try and pay for this. But let's hope the firemen, aka Washington, who started the fire, can put it out the right way by cutting spending. That would lead to much better results in the long run for the American people and our economy.
Well, we can only hope, right?
Right. Yeah, I mean, for sure. And listen, there's things out there. When you look into Canada, right? They have there's like what I call hibernating bearishness, right? A lot of the mortgage rates in Canada are variable. That's just how they do things. That's the norm up there. And you're starting to see housing prices fall, right? Unlike in the U.S. where we're much more, 30-year fixed, right? Well, that means it's slowing down, and it's going to have to come here as well, right? And the other thing you're going to start seeing is, a lot of these office buildings and return to work kind of things, which are still empty. You got managers saying, hey, we want people in the office 4 days a week at least. And you got employees who are openly saying 100% at home, right, or remote. But as the economy cools, that leverage is going to shift back to the managers. And, if there isn't the commercial space to handle it, that shift, due to economic slowdowns could end up being a net positive for real estate and the banks, right? So, there's all kinds of interwoven pieces that, that kind of come hand in hand.
All right. Well, all the perils of all the dread of the problems of Job, right?
Yeah, exactly. But, it is that, the good news is, the markets are moving in the right direction, right? We're not seeing catastrophe. It's now we're trying to fine tune things. Right. And I do see if they can get this soft landing, then where are we going to make money in the future from an investment point of view? It's got to be kind of the dividend payers, because let's just say the Magnificent Seven has already had its run up. As interest rates come down, people are going to run up the risk curve a little, and that's going to be your kind of stop in, so to speak, when cash doesn't pay as much anymore. And it might mean that the indices themselves don't necessarily go up if we're seeing some of those big ones lag, because there's such an influence on the number, on the 600 on the S&P, things like that.
Right.
So we could see some of the smaller, what I'll call more value oriented things rally and carry those bigger ones that have literally carried the S&P this year. I mean, that's what's, when you go look at the amount of the 500 stocks that, of them, which ones are up and which ones are down, I don't know what the final number is, but the big picture is the Magnificent Seven has carried the vast majority of this annual gain that we've had, and that's going to slow down. And then, knock on wood, right? Let's hope the Fed doesn't administer too much medicine to kill the patient.
Yeah, well, the Fed's been known to do that before. Sometimes we've seen in the past, James, that the economy winds up on life support, and there's no doctor in the room to administer the paddles, to do the defibrillator, to bring it back to the patient back to life, right? To torture the analogy a little further.
For sure. That's, that is something that we have to watch out for, is the bottom line. And then, Eddie, let's see what happens with Powell this afternoon. Let's see what he says.
Hey, and let's not forget, if he provides too much stimulation to the patient to bring him back from the dead, then we have inflation, and it's global, and potential currency collapse, all this good stuff. Congress is not cooperating because they're not reining in the fiscal spending. So where does it all end? I don't know. Maybe it ends in Ukraine or in the Gaza Strip for the economy, but we got challenges ahead. Hey, James, just tell us, where do we find you? How do we connect with you on the web?
Yeah, absolutely. I'm www.poollocke.com, POOLELOCKE.com. That's my webpage, and there's links to my radio program in there as well. If you're in the Wilmington, Delaware area, I'm on the radio every Sunday at 11. So I'm always happy to take questions and hey, talk about the road ahead.
All right. Hey, appreciate you coming on. Hey, got a question for James, myself. Again, the email address is kl@kerrylutz.com. A link to James's website is on the show notes to this interview on financialsurvivalnetwork.com. While you're there, sign up for your free newsletter. James, always a pleasure. Thanks for stopping by.
Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.